Hello and welcome to the Stock Planner channel. We're an education channel sharing our ideas, doing our own due diligence, taking responsibility for our own trades, and winning. We're swing traders trying to capture the tops and bottoms of the market or the reversals. In today's case, we're trying to catch a reversal based on earnings. CSCO, we're talking about CSCO. CSCO just had earnings, which caused the stock to drop. This stock is a nice, strong stock, nice green snowflake. It pays a dividend. It's healthy. It has a past history, very good. It has some growth. The growth is only 5.24%. It had a 16% growth over the last 5 years annually. This is not that great a growth that's going to slow down, but this is a good, strong company, but dropped like a rock recently. There it went. See it? Boop. Would you like to hear that again? Boop. There's the earnings in line with the expectations, so there wasn't no surprises. But the revenues are disappointing investors. The revenues are flat. As I said, I'm a swing trader. I'm looking for the bottoms and tops and trying to capture the trend in between. And if I could do that, I'll make some see or spank. This is a zigzag indicator. I use it just to kind of visually see what's happening. You can't use it to trade. Right now, the zigzag doesn't know what it's doing. It's thinking CSCO might go up. I use other indicators like the RSI to predict the changes. There's the RSI coming back around. The stochastic RSI come back around. And I guess the MACD is close to the zero line, but I like it above. And then that's a sign to go short. When it all occur together, that's an indication to go short. This would be a long, and it went along a little bit, but then continued on. So this might have lost some money here. Now you have the MACD below the zero. That's an indication to look for long. The stochastic hasn't really come back around yet, but it's looking like it's going to. But the RSI has come back around over its 30. The stochastic is not quite yet, but the indicators are saying maybe it's going to go long. Maybe this is bottomed out after its earnings. You had earnings here, and then you had the boop. I'm trying to add a little excitement to my videos. That's why I'm giving you the boop. What happens is a bad earnings report or something that disappoints, everybody gets excited, goes crazy. It sells. And then after a couple days, calmness sets in. And now you have to question whether it's going to stop and go up, continue a slight ground down, or stay in this relative area. We are in a recession, I think, and we have some inflationary periods, which is going to cause companies not to invest in technology. So I think what we're going to find, we just had a opened up red. It's 9:30. I think it's going to stay relatively stable, but definitely trade in this range here around 40 and 46. In that sense of calmness, it's kind of like having an argument. Everybody gets excited during an argument with your wife, and then reason steps in, and it takes a couple days to kind of calm things out, where you get the cold shoulder a little bit, and things stabilize. And that's what I think is going to happen with CSCO. It's going to stabilize. There may be some drag down because of the inflation recession situation, but this stock, remember that big green snowflake, wants to go up. So let's see if we can find a deal that will keep us in this range here for the next month or so. 40 to 46. Using a simulation tool called OptionStrat. It's free. I type in CSCO, trading at 43, we see. I'm going to look at a calendar put spread. I'm going to sell a July 15th put and buy an October 21st put, which will give me nothing. This is costing me $146 to do this deal. And that's my max loss. And that's great for this kind of environment. My max profit is 134. But this is not what I'm planning on losing. Generally, I try to make 25% of my max profit in these kind of deals for a calendar spread. 25% of 100 is $25, and half of 100 is another $10, $15. So I want to try to make $35 to $40 on this trade. And to do that, I have to wait till here and here. So I'm going to have to get my $35, $40, I'm going to have to wait to June 24th at least. Now my max loss is around 8 to 12%. That's going to be down in here and up here. So I'm really looking to lose around 30 bucks to make $35, $40. So it's a 1-for-1. But look at the potential profit here. If I get in this range here and it stays in that range, 40%, $40 on a max loss of 146 is about 25%. That fits the requirements. So as long as this trade stays between 40, 39, 48, and 46, 40 and 46, that fit, remember that? 40 and 46, I have some chances of winning. And then if it doesn't, I need to manage this trade and minimize my losses. 40 and 46. Will a gap fill? Will it stay in this area here for a $40 profit or potential $140 profit? I guess it was around that, 134 or something like that. This is a defined risk trade, low risk, good potential profit, decent risk reward. It's something I'm considering doing. Please leave a comment below. My TradingView settings are in the description. Leave a comment whether you agree or disagree. Is this trade a neutral trade, or do you think it's going to go up or down? And do you want more Hollywood, more boops in the video? Happy trading. Don't take yourself too seriously. We'll catch you on the flip.